Tomorrow is going to be an epic day for the stock market. You are going to hear from Fed Jerome Powell, and what the markets are pricing in could cause stocks to crash. Now, stocks crashing could be good news for other stocks such as AMC that are heavily shorted, that shorts are using a lot of these said stocks like Apple, as collateral for their AMC short position. So we're going to get into kind of both of these things here in this video. A big highlight will be on tomorrow and the Fed, as well as with AMC stock. And an interesting topic that I do want to go over that comes from this article that says, it's this one. The movie industry cannot afford for AMC to go broke. The longer the strike lasts, the greater that possibility becomes. So what are they talking about here? Well, we'll get into it here in this video. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. So first things first, I do want to start off with AMD earnings as well as Ford. AMD is down about 6% currently here in after hours. Didn't really have bad earnings at all. But I think a problem is that these stocks are already so high. I mean, over the past year, you were at the basically 2022 highs heading into these earnings. So you really got to impress on earnings to not fall. Same thing with Ford here. Obviously, they weren't as high, but Ford is down about 1.5% here in after hours. And this potentially could be a problem for stocks such as Apple that report earnings on Thursday. Because if you look at Apple's chart, it is priced for perfection here. Like, more than priced for perfection. It's priced as growth is picking up. And that's likely not to be the case. Now, Apple's going to be on Thursday. Tomorrow is going to be Wednesday. You're going to get the Fed. And both of these catalysts, Apple earnings and the Fed, will drive markets from here. Apple, because obviously they are 10% of the NASDAQ, 7% of the S&P, based solely off of how they move, it will bring up or down the broad markets, right? That's going to happen. Apple is that company that can move the broad markets. Out of any other company, it's Apple. Now, the Fed can also move the broad markets. Now, what we're expecting from the Fed, if you guys go to investing.com/Fed rate monitor tool, about 85.7% of investors are expecting a 25 basis point rate hike, taking the federal funds rate to 5 to 5.25%. But if you look at what markets are pricing in for that June meeting or the July meeting, you're actually starting to price in your first rate cut, which is absolutely insane. At the next Fed meeting, there is an 85.3% chance of getting a rate cut. That's high. That is very high. When the Fed is sitting here saying that you're not going to get a single rate cut in 2023. That's a problem here. Because it's not what the Fed raises, right? Unless the Fed comes out tomorrow and pauses or gives you a 50 basis point rate hike, the markets are not going to react to that. You're pricing in a 25 basis point rate hike. That is well-known information. Now, what the Fed says tomorrow will be huge. Because if you look even further down, July, you're still expecting the Fed to have paused. And some people, 37% of people, are expecting another rate cut in July. If you go to September, 23% of investors are expecting 3 back-to-back rate cuts. That's insane. That makes absolutely no sense to me. So tomorrow you're going to get at 2 p.m. the initial statement that comes out. This statement doesn't change much from meeting to meeting. Sometimes there's small variations and small changes. Like last time it was the Fed changing from ongoing rate hikes to further tightening. People seeing that as maybe one more rate hike and we're done, right? Small little verbiage changes. can give you market reactions. But more importantly, coming at 2:30 p.m. tomorrow is going to be the actual press conference. Now, that's where Jerome Powell is going to try to solidify what the Fed wants to do. And what a lot of people, some people think, is obviously some people are expecting a flat out pause, a dovish rate hike. But I think the Fed's going to remain data dependent. And I think everything the Fed has been saying so far is not a bluff. They're going to remain data dependent, and they're going to stress what they have seen recently with inflation expectations going higher. And inflation over the last 3 months since the last Fed meeting going higher is also a negative. And that's something the markets are not pricing in here. The markets even today fell about 1.12% in regular trading, but you're still at 410. You were just almost at 420 just 2 trading days ago. You were at 418 on the S&P 500. That is pricing in perfection. That is pricing in a dovish hike plus some, right? And like we talked about, a lot of people are starting to expect the first rate cut at that next meeting. Not tomorrow, but the next one after that in June. So I think either way you're set up here for disappointment. Doesn't look like that is going to happen at all. That would not be my base case scenario. But the markets are looking at it as almost a certainty. So I think that is a big problem for the markets coming tomorrow. Now, you're also going to get, which this is really not going to matter in the grand scope of things, but let's talk about it anyways. You're going to get, what is it? ISM Services PMI. You're expecting that to come in at 51.5. Last month's reading came in at 51.2. So you're expecting that to get a little bit, frothier, a little bit more to the upside, and that's not a good thing. Services has been the sticky part of inflation. Fed Jerome Powell said multiple times that goods inflation is pretty much gone, but services inflation remains the problem. So it will be important tomorrow, but after all, the Fed a couple hours later will be the big catalyst of tomorrow. So either way, me personally, I think you're set up for disappointment tomorrow. And I think the markets are going to fall tomorrow. Now, to what degree they fall really depends. Keep in mind, this statement comes out at 2 p.m. The press conference is at 2:30 p.m. So typically you don't have that much time to respond, but the markets can move a couple percentage points, honestly, sometimes, based off of those press conferences. And then heading into Thursday, you will see a continuation of whatever move we get by the end of the day tomorrow. And then on Thursday, obviously the day after tomorrow, is going to be Apple earnings. So you're going to have one big catalyst after the next. Now, why this is important for AMC, why I'm pointing this out to you guys, is because Apple, stocks like Apple and other large tech stocks, think about your most staple companies in the world, companies that you cannot conceive their revenue to fall like 50% or for them to go out of business. It just the likelihood would, there almost is no likelihood. I'm talking Apple. I'm talking Google. I'm talking Microsoft. I'm talking these big players, right? Amazon. A lot of people can't live without ordering on Amazon. A lot of those stocks are the stocks that hedge funds are putting up for collateral in AMC because of the rule changes that we've seen in the summertime of 2022. They can't just put any old stock up for collateral. So if Apple does take a hit, especially after earnings, but if the markets take a hit tomorrow, wouldn't surprise me to see a slight green day, a slight red day, and then to get a bigger reaction after Apple earnings, since Apple and AMC tend to be so correlated here. When Apple tends to fall, AMC stock has been tending to rise. And we talked about this, I believe it was yesterday in the video yesterday. Go ahead and look at it. Literally by the minute sometimes. Apple will fall and AMC will go higher. Now, why do I like to pick on Apple so much? And this isn't the first time I've picked on Apple, but Apple is a stock hedge funds have to own. And I've talked about that before because they have to at least match the S&P 500. If the S&P 500 returns 10% and you're a hedge fund and you're not even close to that, well, investors are going to pull their money. Investors are not going to be happy with the performance, right? Because why not just buy the S&P 500 if a hedge fund can't even beat that, which most of them cannot beat the S&P 500 as well. So that's a big part of kind of what we have in store next for AMC stock. Now, obviously, Friday is going to be AMC earnings, and I do expect a ramp up into AMC earnings and then a more aggressive move after. You even seen yesterday that Adam Aron, the obvious CEO of AMC, touted their strong cash position in a tweet because Robinhood said that AMC was going bankrupt, at least at 1:45 p.m. yesterday to 1:48 p.m. 3 minutes, that error message was put for AMC, and Adam Aron was not pleased. And based off what he said with their cash position, a lot of people are starting to expect some good earnings, or starting to think at least that maybe we do get some good earnings. And I'm in that camp. I think AMC is going to give us good earnings. I think they're going to have good things to say about the popcorn business, about the credit card business. I think they're going to have good things to say about the variable pricing on their seats, in which that's a new initiative they announced last quarter. I think they started to implement that, and I think that is going to add a lot of revenue. You really haven't seen too many changes to the theater business as a whole in a long time. This is a big fundamental change, whereas like everyone obviously going to see a movie, they're all going to sit in a seat. If they want to sit in, the middle of the theater, or the front or the back, wherever is deemed to be the best seats, those seats are going to cost more money. They're going to have to pay more money. It's a way to increase prices without increasing prices as a whole. Sometimes that gets a bad narrative, right? Raising prices, people don't like that. But if they're raising prices because the seats are deemed more valuable, well, that could be a huge driver for AMC's actual business. And I think that is something we will get reflected on here on the next earnings that we are going to get on Friday. Now, AMC's earnings are pre-market, so you're going to get a reaction throughout the day. You're going to be able to trade these earnings, but then that following week, you're going to get an even bigger reaction. In my personal opinion, you could get a 15-20% rally on earnings from now until earnings, and then after, even the following week, see a bigger reaction, as likely stocks are not in such a good place after Fed Jerome Powell, and obviously, as I went over, Apple earnings. Apple is priced for perfection. Bottom line, simplify this if you'd like to. Apple priced for perfection heading into their earnings. Not much more they can go to that upside. They're priced for perfection. The markets as a whole are pricing the best case scenario. I don't think Fed Jerome Powell gives us the best case scenario. That makes me bearish. Now, if the markets were at 380 or even 385, 390, this would be a different discussion. I would say, well, the markets are kind of expecting, bearishness. They're not really priced that high. But you're at 410 on the S&P 500. That paves the way for some substantial downside from here, and that could put pressure on shorts in those AMC short positions. That's the bottom line here. Now, AMC stock, the live short interest of free float is currently sitting at about 25.83%, the free float out on loan at 34.62%, and the dollar amount currently sold short in AMC is $753.5 million. That's a number that continues to go higher, and that's the number I really want to pay attention to, because the higher this number goes, the higher the dollars that are at risk in these short positions, the more likely shorts are to cover on those said short positions. Now, the free float out on loan at 34.62%, 178.76 million shares that are currently out on loan. Days to cover at 5, cost to borrow 243.72%, and utilization at 100%. Now, this 243% cost to borrow number is a trailing 3-month average, and that's why shorts lost about $2 billion in Q1, because over the last 3 months, those cost to borrow rates have been killing these short positions. There's literally no other way to put it. Cost to borrow rates have been killing shorts in this short position. Now, obviously, AMC is going to, trade a lot, mostly, I would say, from here off of the court date. And any new news that we get will be key. And I don't know when that news is going to come, but when that news does come, I think you get a revote of common stockholders. And I think that is going to be very bullish as well. So on top of this bullish narrative that I am speaking about currently with AMC, I think there's another bullish catalyst around the corner. When I say around the corner, the next couple of weeks. If Judge Zern wants to wrap this up by the end of June, that means something will get done before then. And you are currently, tomorrow's going to be May 3rd. So clock's a ticking to do a new revo or to do some kind of, proposal or change the settlement or something along those lines. So do be on the lookout for that, most importantly. As far as option activity for the day, you have seen 33 orders totaling $8.74 million, positive order value of 3%. If we take a look at the option chain for AMC by the end of this week, 52% of the calls or of the open interest is calls. About 48% of the open interest is puts. That is a positive ratio. That is an encouraging sign. A lot different than what we've seen over the last 2 weeks before this most recent rally with AMC, where that call open interest number was like 25% to 30%. It's a lot better now at 52%. Even at one point, that April 21st option expiration was 9% calls. It was all puts. Looking a little bit better now. Again, just to put that into perspective, this means for every 2 options on the S&P 500, one of them is a call, one of them is a put, roughly. Before, if you had 10 options on AMC, one of them was a call and 9 of them were puts. So a lot more people are feeling a lot more bullish on AMC right now rather than the last 2 or 3 weeks or so. So there you have that. As far as the Stocko tracker data, let's go ahead and refresh this page. You currently have about 48,000 calls in the money. Out the money calls at 114,000. In the money puts at about 13,000. Out the money puts at about 138,000. So in regards to option activity, there certainly is a lot that is out the money, but a lot of calls have started to go in the money now, and I think that trend does continue over the next couple of days. So there you have that. Now, as far as the data we got today, JOLTS job openings fell more than expected in March to the lowest level in nearly 2 years. Job vacancies totaled 9.59 million for the month, down from almost 10 million in February and below the estimate for 9.64 million job openings. So you missed on estimates pretty big here, and it's also down pretty big on a month-over-month basis. Now, layoffs and discharges jumped by 248,000, taking the rate as a share of the workforce up to 1.2% from 1%. Orders for manufactured goods increased 0.9% in March, less than the 1.3% estimate. So I think part of the sell-off today was based off of this data and what you even got yesterday as well. The ISM prices paid actually was much higher than expectations, showing that maybe, it's not, inflation's not coming down as fast as what people would like it to. And that's the ultimate problem that we're going to have here in the markets. Now, if we do go ahead and take a look at AMC stock, AMC performed very well today. Granted, the S&P 500 was down the most you have seen in a long time. AMC stock was down about 2.65%, call it 2.5%. You wicked down pretty low here, came back up, looks like a candlestick pattern that is, forming a hammer candle. Again, that is what you've seen down here before you kicked off about 5 green trading days in a row. Now, the wick here is not as big. You're not getting the same handle or hammer kind of pattern here. The hammer part is a little bit bigger, but nonetheless an encouraging sign. You almost perfectly bounced off of that 50-day moving average at the lowest point today. Again, another positive factor, and again leading me to believe before earnings you get a spike into earnings, and then after earnings, you see a larger continuation effect, as typically about 80% of the time, AMC does rally after earnings. So there you have that. Ladies and gentlemen, tomorrow is going to be dominated by Fed policy, what the Fed says. Most importantly, keep in mind, markets are priced for perfection. Market participants are even starting to forecast rate cuts by the next following Fed meeting, which is not going to happen. Fed Jerome Powell's been very clear on that. And just for him to reiterate that they don't expect hikes in 2023 could be the tipping point of this market. Now, last thing I want to say, on top of that, today is May 2nd. As I reported to you guys in the videos yesterday, May 2nd, 2011, was the peak of the markets. That is what started the drop of 21% based off of the debt ceiling fears. Now, this time around, look at May 2nd. Looks like it might be another peak here, and you are starting to fall pretty aggressively. And this is something Evercore put out yesterday that really caught my attention because, I mean, you know, May 2nd, it's even seasonally, May is a very weak month, right? Sell in May and go away. So granted, May 2nd was the peak in 2011 before shit really hit the fan, and that is right here, May 2nd, 2011. And then you started to really fall from there. And debt ceiling fears are back, right? For good reasons, because even if you get close to defaulting, if you're a week or two from now, like, hey, the debt ceiling, you know, it still hasn't been raised, we're about to run out of money. The S&P downgraded the U.S. economy in 2011, and that's what caused this 21% fall from the peak to the low. You don't even have to default to get a lot of pain in the markets. You just need to get a downgrade or warnings of a downgrade, and that's where, you know, shit can hit the fan nonetheless. That's why in America we're privileged to have low interest rates most of the time. It's because we've never defaulted on our debt, and people want American dollars. Really the only difference between us and something like Brazil, where their mortgage rates can be 20, 30, 40, 50%, is because we've never defaulted. People want our dollars. You know, and that's why you can start to see why the markets might start to fear this. And I think part of this drop today was debt ceiling fears. That X date coming about 30 days from now is going to start to eke into the markets a little bit more. So that is going to do it for this video. Let me know what you guys think about the Fed meeting coming tomorrow, as well as AMC stock ramping higher into earnings. Thank you guys for watching. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Like I said as well in the last video, if you guys do want to come trade with me live in real time, link down below in the description of this video. We did just hit a over 400% winning trade on ANET. ANET dropped about 15% here today, and we are still in that trade because the max gain is about $5,000 off a $250 initial investment. If ANET drops to $130 per share, you're about $5 away from that right now. So it's still looking pretty good. And those are the kind of trades that we are hitting on a regular basis. Obviously not a financial guarantee or recommendation. You could lose all your money. These trades could go to zero. All of that, you guys know the spiel. But if you guys want to join a great community, link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.